Okay, everybody, welcome to the Tuesday afternoon, April 25th session in our series on entrepreneurship in Asian high-tech industries. For those of you who are watching from the other side of the Pacific, it's already Wednesday morning. But I'm Richard Dasher. I direct the US-Asia Technology Management Center, and I'm very happy to welcome everyone. We want to say a special thanks to the member companies of our industry affiliates program. They are our almost sole source of revenue, and so it's thanks to them that we can put on programs like this. Reminder to all students who are registered for credit, the comment for the April 11 session is due today, so make sure you get it in by tonight. The comments for each session are due within 2 weeks of the date of the session. Please see the syllabus if you need details about what should be in the comments or how to submit them or whatever. So after our discussion of smart cities in China last week, we move on to Southeast Asia for today. And I'm delighted that Mr. Peng, who is the co-founder and managing partner of Monks Hill Ventures, can be with us today. Monks Hill was early as a domestically based venture capital firm in Southeast Asia. And it's also, one of the leading VCs in Southeast Asia now. Before Peng started Monks Hill, he was a venture partner at GSR Ventures in China. You were living in Shanghai, right?
No, Beijing for about 4 or 5 years.
Okay. And GSR has made some notable investments, things like Didi Chuxing and Kunar. He's also been an entrepreneur. He co-founded a series of companies like Match.com, Interwoven, and Accentuate. And, these companies today generate more than $1 billion in revenue annually. He's been awarded a public service medal from Singapore. He has held board director positions in a number of companies and other organizations. He's the chairman of a group called Solve Education with an exclamation mark. And he's also a member of the International Advisory Board for the University of Texas at Austin. He got his bachelor's from UT Austin in computer science, and he also got a master's in computer science. I'm sorry, your bachelor's was EE. And got a master's in computer science from University of Illinois in Champaign-Urbana. So, Peng, I think you're going to start out by sharing a few slides with us, right?
Try and do that to set the stage.
Okay, that sounds great.
So there are a few things that's been happening the last 12 months or so, both in terms of what Monks Hill has been doing, and also Southeast Asia and what's been happening. It's a very exciting time because I think the world has done a reset, and a lot of stuff that didn't make sense have stopped working. Right? I think you guys understand the concept of negative blitzscaling, right? Negative unit economics, blitzscaling. So increase your losses as fast as possible. That has been a habit of the tech industry the last 10, 15 years. That's gone. Companies that are doing that don't have gross margins, don't have positive unit economics. They're shutting down. Last 6 months, almost every month you see 1 or 2 major shutdowns in Southeast Asia. Some pretty big ones. JD.ID. This is Jingdong in Indonesia, shut down in January after about $1 billion worth of investing. Goto has not shut down, but it's got less than a year of runway left. Goto is the merger of 2 negative blitzscalers, Gojek and Tokopedia, right? Both Goto and Grab's current valuation is less than or in the ballpark of half of the money they've raised, right? So serious stuff is happening that is, I think, positive, right? it's not positive and the market values are crashing, but it's very positive in that things that don't make sense are starting not to make sense again. For Monks Hill, we spent a bunch of time thinking about how to communicate with the rest of the world about what we do in Southeast Asia. And as a result, we decided to start a council with quite a number of pretty prominent people. We've got 2 former ministers on the council, George and Gita. Gita was former Minister of Trade in Indonesia. He's actually here on a sabbatical in Stanford, writing a book. And we got Doris Mansaysay Ho, who is one of the most powerful Filipino businesswomen that joined us also. So our idea for this council is very simple. It's to communicate why Southeast Asia is an interesting place to be doing business to the rest of the world. Every time we went out fundraising the last 10 years, it's very unlike China, right? You don't have to explain China when you're fundraising. Every time you talk to an investor outside of Southeast Asia about Southeast Asia, you got to tell the whole story. And we want to try and push that along as far as possible to avoid having to do that whole conversation every time you talk to someone. And actually, a lot of interesting things are happening. We published a report with Bain a few months ago, and you can download the report. You can go to angsanacouncil.org. Not sure if there's a spelling there. I'll get it to Richard.
We'll get it, and we can put it up on the website.
And you can download the report. If you are an econ nerd, you will enjoy it. If not, it's dense. But here are the high-level conclusions from that report, just to give you a sense of Southeast Asia at the macro level. But this turns out that this is one of the first reports written about Southeast Asia in about a couple of decades. Right? So in the 1997 Asian financial crisis, some of you were probably not even born yet, caused a change in mentality in our financial institutions, in our big conglomerates, etc. And we got a lot more careful. Right? As a result, we didn't grow as fast, but we became a lot more stable. Currencies were more stable, government reserves were better, trade balances were great, etc. All the things you like to see. And the only primary concern right now, we in Southeast Asia, we're talking about the recession in the West. Right? We're not worried that the recession will come unless it's really, really bad. We have our trade numbers are about 1 single-digit percentage with the US, single-digit percentage with Europe. So yeah, combined, if there's a major recession across these 2 geographies, we could face a lot of problems. But I think we're okay so far. The 10-year prospects also look very promising. All the traditional growth stuff is happening, and the tech-enabled disruptors are actually adding sort of turbo charging fuel to the growth. And the China dividend is probably over-touted, companies moving out of China to Southeast Asia, the trade with China, etc. But the Asia dividend, most Southeast Asian countries trade the most with other Southeast Asian countries. So there's a lot of internal trade going on. And that's the Asian dividend, and also with India. The third thing we found is actually very interesting. If you study economic development, the traditional way the Asian tigers were built from Japan onto, I guess, Singapore is a small one, but we basically created chaebols or karetsus, and we protected a group of typically manufacturers and their suppliers. And they grew the manufacturing sector typically by 10x or more. right, over time, and the economy grew. This is how Japan grew, this is how Taiwan grew. The problem with that model is that your economy is used to protected markets. So your services sectors, which is half the GDP, are not very efficient. And you see this problem today, Japan, Korea, etc. The innovations in these sectors are just starting to happen. Whereas Southeast Asia, we started almost as soon as the tech boom started, we started optimizing across our services sector, which is again half the GDP, which is about 3 trillion is the GDP, so half is 1.5. So what's happening is what we call the technification of services, right? China's 6 trillion in GDP in services, if you look at that carefully, most of that profit pool go to tech companies that didn't exist 20 years ago, right? Think about that, right? Half the GDP's profit pool go to companies that didn't exist 20 years ago. This is what's happening in Southeast Asia now with these TEDs, right? And all you have to do is double the productivity of your services sector and you increase your GDP by 25%, right? So it's pretty straightforward math on this one. So I think we're more fortunate because we figured out 2 engines. Some of the Southeast Asian countries are not as good in the manufacturing sector, but if you figure out both, like Vietnam did, I have 1 or 2 slides on Vietnam, you see this incredible growth. And the last sort of set of conclusions, Vietnam obviously has done very well. I'll show you some graphs later. Singapore, strangely enough, has been one of the fastest growing countries, but for reasons that you might not expect, is immigration, right? And it's hard to predict what's going to happen in Singapore because immigration has become a political issue. So Indonesia obviously has, you've heard about all the stuff that's going on there in terms of the huge tech company, huge techs. But the challenges is a lot of the models they've been running on are the negative blitzscaling models. So there'll be a lot of slowdown in Indonesia coming up. The other countries are growing, but we think they need stronger economic policies to get going faster. We get to the next slide. Some charts to give you a sense of growth. Vietnam, obviously, the strongest one. Now, China is there for reference, just so you know, right? I think the rate of growth in China is just going to fall off pretty quickly now. Right? But no, I don't think there's a nation in the history of the planet that has achieved 40 years of this kind of growth. Vietnam, you can see, is way above everyone else in Southeast Asia. It just overtook the Philippines in GDP per capita last year. And I think it'll overtake Indonesia in the next 5 years. So if you think about how fast that growth is, it almost doesn't matter what the base is. If you've got a business there, your business is there on a rocket ship, right? So you're just riding along the growth. There are other countries that match those growth, like India and Bangladesh, but they have their challenges in terms of single points of failure. Bangladesh has challenges with the weather. And there's not much else that look anything close to this kind of stuff that's going on in the world, right? That's why it's so interesting. These are the factors that Bain looks at for thinking about how confident we should be of a region's growth. And you can see Southeast Asia is about 15 years behind China. So you can see the colors kind of lag China in that way. And about South Asia is about, India specifically is about 20 years behind China. So you can, again, see it in the colors here. It's mostly red here. and it's mostly red here, right? And we're somewhere in between. So there's a lot of work. Some of our ASEAN Council members are actually quite active in trying to get the governments to do the right things. It's not always obvious because this sense of using technology enabled disruptors is relatively new in economic development. You don't see this all the time across societies. China was probably the most visible one in using that capability. So that's about all I have. The next few charts are just about Vietnam, just to give you a sense of where they are. Right? They're growing very fast. It's at 3,700 now, last year. We are cautiously optimistic about where Vietnam is. I've got 6 people there on the ground, and we're deploying as fast as we can. So that's the overview of Southeast Asia from an economic perspective. I've given you a sense of where it is in terms of the downturn. What I haven't talked about is stuff you don't read about yet. Because just like you've been talking about it here, about AI and generative AI and LLMs, we're talking about it in Southeast Asia. So the way the conversations have gone internally, you don't see a lot of this public information. The way some of these conversations are going is the nature of business you will be doing will be drastically different. And it'll be primarily due to the fact that I think people miss the key point about generative AI. They think it's more, cheaper, better, faster. It'll destroy the value of content, which it probably will. But that's not the point, I think, for a lot of businesses. This technology, for the first time, enables our machines to interact with us the way we interact with us, right? So the nature of value creation, the nature of your business model, the nature of your customer relationship is going to change. So a lot of our services companies are looking deeply at what that change looks like in the next 5 years, right? Can you build relationships with 100 million people? Can you build relationships of trust with 100 million people using technology and your company's value system? So those are the things that's happening in Southeast Asia. I think it's interesting that the core AI stuff is happening here, but the very interesting application of AI to large-scale businesses is actually happening globally. At least it's happening in Southeast Asia. I've got about 30 plus companies as podcasts. At least half of them are looking at setting up AI teams to build this kind of technology for their core business. So hopefully this gives you an overall really high-level view of what's going on in Southeast Asia, the economic background. And I've got more I can talk about, but I'll take a pause here and see if you guys have questions.
Yeah, this sounds great. I got a couple of questions I'd like to start with. First of all, what are the big factors behind the growth in Southeast Asia? What do you think is really driving it?
Yeah. So the easiest way to look at it is most of the services sector has been run with human beings, pieces of paper, shoot from the hip kind of operating, right?
Yeah.
We've got a business called Ninja Van.
Mm-hmm.
Its top line is probably approaching $1 billion.
Yeah.
Right? It's 8 years old. All it does is it ships It's FedEx without the planes. It ships parcels overnight for the average of about $1.
Yeah.
And it makes about 20 to 40 cents on that $1, right? There's no way you could do this without tech.
Right.
I mean, if you drive a Gojek, which is a small bike, from one point to the next, it'll cost you $1 to just do that with the labor, right?
Yeah.
So,
So behind that, though, are people that need to send packages.
Yeah.
I mean, there's something
Why are
going
they
on with
sending-
lifestyles about why people are now sending more
cheaper,
packages.
better, faster.
Yeah. Okay. Okay.
As simple as that, and more.
Yeah.
Cheaper, better.
Yeah.
Suddenly, people have variety. They have price competition at scale, at humongous.
Yeah.
E-commerce is growing double digits every year. Live commerce, you guys probably heard of live commerce growing to 25% of e-commerce in China, right? You're wondering why TikTok is growing so fast? Live commerce, right? It went from
Yeah. So live commerce is things like live demos on TikTok or something where, people buy immediately, click in your cell phone. It's growing a lot more in Asia than it is here because people are still using laptops more here. And so the fact of the click in the picture is just not nearly as interesting on this kind of a platform. So that's what we're being left behind in regard to that kind of activity.
Might not be a bad thing when it comes to this kind of consumerism, but imagine this form of shopping has hit 25% of e-commerce in China. It's the first time the shopping cart has been disrupted, right?
Yeah.
And let me.
Now we're talking trillions of dollars.
Yes.
It's 35% of commerce. Yeah.
Let me take that a step further. I just I just learned of the existence of a company. There's a bunch of Stanford AI grads, right? And they've built this generative AI system. And they go to brands and they ask the brands, how many influencers do you want and what do they look like? And they set up all these influencers.
Yeah.
They're not real.
Virtual influencers.
They're bots. All of them are bots.
Yeah.
And they're growing. They're growing like nuts, right?
And it works.
It works.
Yeah.
People will click buy.
Yeah.
So generative AI is destroying the value of all content.
So Peng, kind of before we go into the new trends again, Southeast Asia is much more diverse than, say, the European Union, right? I mean, you've got you don't think so?
True. No, I'm not
You've
sure.
got different languages, you've got different government systems, for sure, right?
Yeah. Same. I think there are a lot more countries in Europe than there are in Southeast Asia, for one.
Yeah, okay.
ASEAN's like 10.
Maybe, although I think that France and Germany are such, gorillas inside the EU that they basically push a lot of stuff through.
Yeah.
Yeah. So in terms of being active across Southeast Asia, how do you deal with borders? And that's you as an investor and also for entrepreneurs.
So this comment came up a lot when we started the fund.
Right.
And for all our friends that started funds.
Yeah, this is part of the whole story that you have to tell.
Yeah, and we were trying to explain, we already do business across 6 countries, blah, 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 existing countries, existing businesses, etc.
Yeah.
But these weren't tech companies that we could give as examples. At this point, this is not even an issue because Ninja Van, until Myanmar blew up, they were in 7 countries, right?
Yeah.
And C Group is in, I think, about 8 or 9 countries across Southeast Asia and North Asia. In fact, I think the competitive advantage of Southeast Asian companies is that we're international by necessity. Each one of our markets are too small. As a result, if once Ninja Van has settled with Southeast Asia, if it wants to go to Bangladesh or Pakistan, it's just another country.
Yeah.
It's like Uber almost, right? All the systems are ready to go. It's very unlike a lot of the Chinese large.
Yeah.
So my prediction is the next 10, 20 years, a number of globals you will see coming into existence
Mhm.
will be Southeast Asian countries and companies. I mean,
Yeah.
and one example is the C Group, right? C Group is Garena, Shopee, and a bunch of other brands. Their largest market is Indonesia. The second largest market, people don't expect this, Brazil.
Yeah. And, just to point out, Indonesia has a population of 240 million people, or maybe even more, 270 now.
What's the size of this country?
Okay. Yeah. Yeah. And Brazil is almost that big. So these are places that, we don't think about, but they're huge market opportunities.
500-600 million between those two countries.
Yeah. Yeah. So you mentioned the companies that have been, just dropping like crazy, crashing. You mentioned both GoTo and also Grab as not doing too well.
Grab's got about 3 billion in cash. So if you gave me 3 billion of cash, I can build multiple profitable companies. So
unless you decide to buy Twitter with it or something. But yeah. Okay.
Yeah.
So yeah, they've got a lot of
so
cash.
they should be okay, I think. I'm worried about GoTo. Right.
For a long time, Grab and Gojek, right, the half of GoTo, were a really interesting comparison because Grab was expanding very aggressively across Southeast Asia. And Gojek was kind of having trouble getting out of Indonesia. Did Grab expand too fast?
I don't know. I know enough about what happens on the ground that a lot of what they did didn't make sense to me. Negative blitz scaling to the extreme, right? Just losing money to capture
another set of users
that might have no retention with them, right? So it really didn't make sense. I talked to the country managers and they're scratching their heads why they're being told to do this particular program. And it's the investors, right? The investors say valuation is based on revenues. So let's just go buy a bunch of revenues, right?
Yeah.
That's the sickness of the tech world the last year.
So that kind of reached this 2021 spike. And after 2021, venture capital has been slowing down drastically as, economic uncertainty maybe moves toward recession.
VCs are a whole bunch of followers, right? I mean, if you think about it, recessions are some of the best times to invest in tech companies because they got nothing to sell and no one wants to buy anything. So it's a great time.
And on the investor side, you can get a lower valuation.
Yeah. I don't know why people are stopping to invest.
So this is kind of what sort of advice would you have for entrepreneurs in this kind of a climate?
So if you take the AI equation out, I'll be very aggressive. If you look at some of the largest companies, they're built from recessions, right?
Yeah, right.
Google, Amazon, those three different recessions. The only challenge I see now is AI is disrupting everything.
Yeah.
And it's a bit hard to predict what will still create value. So I keep saying value of content is destroyed. Right? Yeah. So if you're thinking of building a content business, make sure you're the one destroying the value. Right? Meaning,
in disruptive innovation, you want to be the disruptor and not the disruptee.
That's right.
Right.
But it's going to happen so fast that you could be doing something that you think makes sense, and within 6 months or a year, because of some development in AI, it doesn't make sense.
Yeah.
Right? So the risk is a little bit higher, but I think some parameters like destroy value of content, and the other thing that's very important, I think, is sustainable differentiation. Right? I think if you sit down and think about what is long-term sustainable differentiation, it's going to come along the lines of proprietary information. So what does that mean for you as a company?
Now, when you say proprietary information, are you talking more about data, or are you talking more about patents, or what are you?
Patents are not really that proprietary, and once people figure out how we can do it, they can figure out.
Then they'll go around it. Yeah.
So that is not.
So it's really having your own kind of unique knowledge that's written down somehow.
That you
know-how, yeah.
Like Coca-Cola's formula.
Mm-hmm. Yeah.
Or it could be, and this is the easier one to do, large swaths of data that you collect because the users are, giving you that information.
Right. Right.
If you have that, and if you are the disruptor using AI, the chances are it's okay. You probably can create very interesting companies.
So, do you think that there are, opportunity areas have to do with that kind of thing, right? What about things like infrastructure development? I mean, because in a lot of developing economies, that's the kind of, things that people look for first.
So we in startup land tend to stay away from the infrastructural stuff, right?
Okay, that's big company work.
Yeah, big company work, huge capex.
Yeah,
it's happening, right? And countries are incentivizing.
Yeah.
Activity. It's especially harder in Philippines and Indonesia because they're the two countries with like 17,000 islands, depending on the tide.
Yeah, right.
So it's very different trying to cover those two countries, than all the others. Like Vietnam is easy, relatively speaking. Thailand is easy.
What do you see in the world of sustainability and climate tech? Or is that just kind of one of those things where if it's good business, I'll look at it?
It is that way. There's a lot of focus on carbon exchange because people want to buy credits in the developed countries.
Mm-hmm.
I see a lot of scams going on potentially.
Yeah.
That area. I mean, if we were to have a serious conversation about climate change and the 3, 4, 5 degrees increased temperature in 80 years, I think we don't have the tech to do it yet, right? And I think there needs to be a lot more research effort spent to invent the sequestration technology and cheaper than brown power, green power, right? And when we get there, people just switch, and temperature will hopefully even out. But trying to get people to lower their GDP by 33% in order not to heat the world up by 3, 4 degrees in 80 years is tough.
Asking people to lower GDP by 33% is a tough question anytime.
Yeah. And just practically, someone highlighted this to me. If you are a developed country, it's just a little bit painful. If you are India, people will die. Right? So that's not a reasonable thing to ask.
Yeah, right.
Because the energy is required for life. Right? So I think those issues, the emerging markets will do exactly what you said. If it makes sense, they'll do it. If not, they'll just ignore it. Yeah.
So Kai-Fu Lee wrote this book a few years ago about AI superpowers, right?
Yeah.
Where only China and the US as nations have sufficient data really to become AI superpowers. It was kind of one of the points in the book. Are there issues with kind of combining data in different Southeast Asia countries or integrating data analytics in Southeast Asia countries to have sufficient scale?
I think Kai-Fu missed talking about the difference between creating intelligence and creating knowledge from data. It's a huge distinction. Almost everyone has enough information to create intelligences, right? That's the good news. I don't think we're going to have 3 AIs that run the world for a couple of reasons. One is they are fairly easy to build.
Mhm.
If you look at GPT 1, 2, 3, 3.5, 4,
Yeah.
they all look about the same architecturally with minor tweaks. And if you look at BART or Lambda,
Mhm.
they also
Yeah.
look kind of the same. So all you need to do is have enough money to train to run the compute power to train these guys, and
Mhm.
voila, you have the large language model.
Yeah.
And so we're going to probably end up with half a dozen to a dozen of those systems. Amazon just announced theirs in this country alone. China will have its own set of stuff. Europe will probably go, we better build a few.
Yeah, of our own. Yeah.
And so you're going to get a lot of these things. So it's going to look like a search engine that you can plug into your system, or a payment system that you can plug into your system. The intelligence, the differentiation you can push into these systems is because of your proprietary information, right? Now you can see GPT has these APIs that you can connect into and control how GPT responds.
Mhm.
That's how you're going to build incredible customer value over time. And only you have that intelligence because it's your proprietary information. And this is how I think the world will develop thousands of different experts, AI experts that can do that.
So kind of in the very last thing you said, is there a concern in Southeast Asia about having sufficient highly qualified personnel, people, talent to thrive in this new world? I mean, in US and NTU, Singapore is an advanced economy and has very advanced research as well as education going on. And, there's other good universities all over the place. But do you think that there's going to be a shortage of real IT experts, or especially AI qualified IT experts?
So the world has always been short of computing experts.
Yeah.
Anywhere you go, here, anywhere.
Mm-hmm.
I think the advantage of Southeast Asia is we have 650 plus minus million people. So the smart ones in that group of people are actually quite good. Right?
Yeah.
They're here all over the place. You can see lots of Southeast Asians here. Every time I'm here, I have a dinner with Southeast Asians. Typically, it's dozens of them from Stanford, right?
Yeah.
GSB.
Right.
So, and the good news about tech is you don't need hundreds of thousands of these folks. You just need hundreds of them.
Yeah. Okay.
So I'm comfortable that we'll have enough people.
So I'm going to ask a couple of questions, then we'll open things out to the audience. And can you tell me if there are questions coming in on Zoom? Okay. So the elephant in the room, what about corruption? Is that an issue in Southeast Asia now, worse than it is other places? I mean, in some ways, there's corruption everywhere.
Yeah. You look at the Twitter files and you're scratching your head going, what's going on here, right?
Yeah, right.
Corruption. It's human nature and it's politics and it's economics, right? Everywhere you go in emerging markets, you see that.
Especially in emerging markets.
Yeah, that's the norm.
Yeah.
To find a Singapore is Singapore and maybe Botswana, and I can't name the third one, right? That's about it, right? I lived in China, and they used to joke about the fact that the difference between India and China is China's corruption is predictable, India's corruption is not, and that's why India is way behind China. And it's not just a joke.
I actually had somebody from Vietnam, and I won't say any more about this, tell me that the advantage that Vietnam has over China is you only have one set of people you need to pay off in Vietnam, and you don't know who you've got to pay off.
Yeah, it's in the process of changing in Vietnam right now.
Yeah, right.
So it's actually a bit of a mess because people don't know what to do and they're just not doing anything. So the economy is
Yeah,
slowing
they're okay, but
because of
they
the
have
cleanup.
growth potential faster than other places.
Yes. Yeah. Um, you know, it's the good news is it looks like if you study developmental economics, you have to get your corruption act in order. I mean, you got to get rid of it over time, and institutions have to come into play, or you get kicked back into emerging markets.
It really does
Middle income
damage
trap.
macroeconomic development.
Yeah, it's very simple. When you are small, you own the entire supply chain, so corruption doesn't really hurt you that much because you own the entire supply chain. But as the economy develops, you need to specialize, right? And therefore contracts need to work. And when they don't work, you get bounced back into your old economy stuff. And this middle income trap in economic development is very, very real. Venezuela,
What you said is so important because more than any kind of a cultural thing, it really has to do with the sort of economic status and how long the institutions have been around.
And you can see the Indonesians being very clear, I mean, very thoughtful about this. You can hear the Vietnamese discussing this. You can, the Filipinos. So I have hope, right? I have hope. But it is a hope that these things go away over time.
Yeah.
And if they don't, the countries will pay a really
pay the price. Yeah, absolutely. So what do you think about or people from here, if they are interested in getting something started in Southeast Asia or getting into the Southeast Asia market, what are kind of typical mistakes they make?
Live here.
Living here. Okay.
If you're going to go after that market, you better be in the market, right?
Yeah, right.
It's a very different culture, system. Everything's different. So there's no way you can figure out what's going on by living here, right? So if you're serious about building a business there, go there. It's not rocket science.
Yeah. Beyond that, do you have recommendations for people who want to grow something and be successful in Southeast Asia?
Make friends with people from Southeast Asia.
Yeah, okay. Yeah, sure.
And I said before that each country is almost too small, or some of them are too small to be to have VC fundable companies. So you have to have multiple countries. And so the way you have multiple countries is you make friends here from those
countries. That's one of the advantages of Silicon Valley. As you say, every time you come here, you have dinner with a lot of people from Southeast Asia.
Right. It's not hard to do that.
Yeah.
I was in Berkeley last night, had dinner with Indians, Indonesians, Myanmars, Singaporeans, a whole bunch of different people. They're friends. They know each other. And they could potentially, in fact, 4 of them were thinking of moving to, after they graduate, moving to Southeast Asia to start a company.
So when was it that you left GSR and started Monks Hill? Okay. So what made you think that it was the right time to start Monks Hill?
Well, it was kind of obvious because, if you've been in China, you've seen that technification happen.
Yeah, right.
Companies that we were building were getting quite large. And in fact, I missed the top of the wave. After I left, it just went crazy. So it was obvious that that's what was going to happen. China was like a crystal ball for Southeast Asia.
Okay.
And, in fact, some of the businesses were copied from China.
Yeah. Right.
Copy and modify.
Yeah. Right.
GoFood, for example, was somewhat of a copy of Ele.me, which is or LME, if you pronounce it the English way. And it was a result of a trip Nadim and some of his engineers took to China to look at. Actually, Ele.me is one of our podcasts, GSR's podcasts. So they took a look at it and went back and built it.
So Didi was a big investor in Grab.
Yes.
And I'm kind of curious, is Chinese investment still popular in Southeast Asia, or is the U.S.-China kind of friction making it
A
harder?
lot of friction. Yeah.
Yeah.
I was the last 6 months sitting in Singapore, and there was a swamp of billionaire refugees coming through Singapore.
Yeah.
When China opened up, a lot of the top investors.
After this is opened up after COVID. Yeah, right. Yeah.
I personally know 3 people in China that have disappeared. Right. So
Okay.
it's fairly serious. I think people don't think about that lightly. They'll leave behind billions of dollars.
So in Southeast Asia, there's more caution about accepting Chinese money now, or?
But also the Chinese money has become, because the Chinese money is actually US money, a lot of it, right? It's the US institutions investing in Chinese.
Right.
The money that exists today have been committed a while ago. So, but there's no new money coming in.
I see. Yeah.
So the Chinese investors are very cautious about deploying it. They do, but not as aggressively as you might think.
So what do you think kind of attitudes are, besides the investment side, about U.S.-China friction? Southeast Asia worried about who's going to win and make sure you keep friends on both sides, or what?
And that's not working out very well for like Singapore.
Yeah.
So instead of making friends with both sides, now both sides are looking at Singapore very suspiciously.
Yeah.
So the problem when elephants are fighting, you should just, I think, stay out.
Be somewhere away.
And I really worry about the sanity of this fight. Right? It makes no sense whatsoever. And I keep hearing from both sides that Taiwan, might spark at any time, right? And again, Russia's invasion of Ukraine makes no sense, and I think, Taiwan, a hot war in Taiwan doesn't make any sense, but might not, sense might not prevent it from happening. So
I do think that, Southeast Asia is so big that both the U.S. and China have to look at it for, strategic friendships. But in any case, I think that Southeast Asia's growth potential, first of all, has to do with, this increased efficiency and also new points of revenue because of digitalization. And do you see, you mentioned that you're thinking that within the next few years, we'll see some Southeast Asia companies going global. Like, I guess, Paytm from India is an example.
Yeah. So their unit economics are a problem.
Okay.
They got to fix that in India first.
Okay. Any idea where we're going to, what kind of sectors we'll see that in?
So Shopee, the easy stuff is obvious, right? Shopping, live commerce, viral videos and social networks. Those things, I think. By the way, TikTok is actually a Singapore company.
Oh,
yeah, owned by the
They were
Chinese.
Bought by ByteDance?
No, they were just incorporated.
Oh,
It's
okay.
a company, I think, that was bought by ByteDance.
Yeah, okay.
Headquartered it in Singapore. The CEO, which didn't do very well in Congress a few weeks ago, but the CEO is Singaporean.
Yeah. So why don't we open the floor to questions? Please use the mic.
Thank you very much for the informative presentation. I had a question about your last slide. So what do you think uniquely positions Vietnam in particular as having such a high potential for growth?
A few things. See if I've got some of this stuff here. There's actually a lot of details here. education, it probably has a highest number of engineers per capita except maybe for Singapore, of Southeast Asia. And that's a huge, huge differentiation. If you try to build something in Asia, in Southeast Asia, you realize very quickly how big a difference that is. A lot of companies are putting their engineering teams in Vietnam. And the other place is India. And actually now, since China's tech sector has slowed down in China, so it's up the two big countries or Vietnam. Right? So that's Vietnam. Number two, the manufacturing sector is next to China, right? There's a lot of stuff that goes into Vietnam for one day and goes back to China. But as the world exits manufacturing from China, if that capability doesn't move in regionally, let's say to Mexico for the US, it moves to Vietnam. So part of the growth the last 5 years in Vietnam has been that at one point they had even challenged pre-COVID, they had challenges with their infrastructure. They couldn't, the power wasn't stable enough to have that kind of manufacturing growth. So that's another one. And the third one, having spent enough time in Vietnam, is probably the least, I don't know, maybe the least visible one. Every family has someone alive who understands hunger. This was China 20 years ago, right? And that, I think, makes one of the biggest difference. It's the biggest difference to me between Vietnam and all the other countries in Southeast Asia. So those, I think, are the 3 key reasons. That's probably other reasons, but there are challenges. If you look at how long it takes to build mass rapid transits, improve the airport, etc., it's not like China, right? It takes a lot longer. So you could say, yeah, democracy works a little bit better, or people get their say, right? It's not really that democratic, but people get their say. People protest, whereas in China, you just get swept aside, but the government listens to people in Vietnam. So that's a strength, that's a weakness.
So I have a question from Zoom and points out that South Asia, right, is 3 times bigger than Southeast Asia in terms of population. And so, logically speaking, the opportunity size is a lot bigger.
Yes, correct.
Do you see kind of this sort of international focused or emerging market focused venture capital shifting away from Southeast Asia into South Asia?
Yeah, this one is a hard one to figure out because I think when the VCs started investing in India, they forgot a very important point, which is GDP per capita. Right? They were pumping up India with 5 times the investments to Southeast Asia when India's GDP was about 20% less than Southeast Asia, and the GDP per capita was less than half.
Uh-huh.
So when you are making, let's say, $100 a month, right? There's not much you can spend on the internet.
Yeah.
So it takes a little bit more GDP.
Not only that, you better be able to take it as cash, not
Yes.
some sort of a subscription basis.
Yes, yeah, and so India's development is not across 1.5 billion people. It's across 100 million people, right? So 100 million people maybe behave something like Germany, right?
Mm-hmm.
And that's okay, but it shouldn't be 5 times the investments over itself.
Kind of statistics point related to that last question. In India, partly because venture capital has been growing so fast in general, foreign sources of VC investments in India still are the majority.
Yes,
Far outweigh domestic sources of
that's
venture.
correct.
How does that compare to Southeast Asia? Are you seeing a lot more Southeast
Yes.
Asia? Okay.
A lot more is, I think there's a lot of wealth internally. So
yeah.
that from
That
the
helps.
family, that
Yeah.
helps a lot. Yeah. Mangsil has decided to focus on the institutionals here.
Mhm.
So 80% of our LPs.
Okay,
from
that's
here.
where the LPs come from, but I'm actually more interested kind of in the GP because GP is the general partners who are really, part of the community. I think that's,
so most of those are locals, right?
yeah.
With US training, most of them, right? MBAs from here, engineering degrees from here.
Okay, thanks. Another question from the audience? Wait just a second for the mic.
Hi, thank you, Mr. Ong, for coming today. I'm very curious on your perspective as an investor. So as a venture capital investor, as an entrepreneur, do you prefer to make investment in a business that is a pan-East Asia rather than a business focusing on one particular country in Southeast Asia?
So at Mangsil, we're clear that we generally avoid businesses that just want to do one country. Like Indonesia is the best example because it's large enough for you to just focus on it. Simply because, number one, there are limits to growth in that country. Number two, you have political risks, political and economic risks associated with that one country, currency risk, all that stuff. Number four is something a lot of people don't think about enough, where you exit, right? And how you grow after you exit. Our general assumption is we're going to go public here in the US, right? And if you are a one country company, the US market will expect you to go public in your home country, not here, right? But if you are 4 or 5 countries and you're going international, a US IPO is very easy to justify. Right? And furthermore, you want to be here because you want to access the capital markets. The markets here are bigger than the next market by an order of magnitude in terms of the capital, right? So, if I had a public company in Indonesia and one here, same size, and they have to compete by growing it fast, right? The one in the US is going to beat the one in Indonesia simply because you can get access to a lot more cheaper capital. So I think that reason alone can drive you to want a multiple country business.
Thanks. That question makes me want to add a follow-on, especially in kind of Northeast Asia. You see a pattern where companies seem happy to become profitable without growing to their maximum potential, and the investors allow this to happen. Is Southeast Asia kind of more like the American environment where a company really better have really aggressive growth and exit plans, or is it more sort of long-term organic growth where, eventually a profitable company that's kind of goes public in a small way on an exchange?
I think the Japanese and the Korean companies find it difficult to leave because of the monoculture, right? Just like Chinese companies have a tough time leaving, right? Because you can get to quite a large scale before you go, okay, let's go somewhere else. And all this baggage doesn't travel well. Right? I remember Mikimoto-san, founder and CEO of Rakuten, requiring every executive to speak English within a year or they're gone.
Right.
I thought that was incredibly brave, but that was the only way for them to get out of Japan.
Yeah.
So that's North Asia, right? The monoculture is a problem for internationalization. Southeast Asia, it's, if you've been around that, you realize even Indonesia or Thailand or Philippines, there is no monoculture. It's a hodgepodge of people there.
Yeah.
So it's much easier for Southeast Asians to to travel around. For one thing, it's not monocultures there.
Yeah.
But for another, we've had Europeans there the last 100 years.
Right.
So we're used to working with everyone from everywhere.
Yeah. Okay. Yeah, that's a good point. That's a very good explanation for that pattern. You had a question.
One of the natural challenges with that is that it's very hard to be multi-country because the regulation kicks in very fast. So how do you manage that tension? I mean, it's one thing if you're in Indonesia because it is big enough, but if you're a fintech out of Malaysia, what do you do?
Yeah, it's harder. It's harder to go multinational if you're fintech. So the question you got to ask yourself: do I have a core model that can transcend regulatory frameworks at some level? Yeah, banking license. You can if you work with enough local buy banks in 2 countries or 3 countries. This happened way before tech, right? Like CIMB, they are in, I don't know, 3 or 4 countries, right? It's a Malaysian bank that started acquiring OCBC, UOB. So it is doable, right? And it didn't take tech to do it. There's a whole bunch of other companies that did it. So I don't think it's that much of a rocket science, but you just have to be very conscious that you have different regulatory frameworks, different, everything, languages, and build your systems accordingly. Again, this is why I think Southeast Asian companies are in such an advantage, because we do that when we're small, right? So we're ready to keep going.
Okay, good, thank you. Other questions?
I have a question regarding our agriculture industry in China, because the government is pushing really hard for a lot of young kids to move from the city to the countryside to be new farmers. What do you think of this phenomenon, and is the use of AI really going to improve the efficiency in the farm industry?
I think the use of AI would definitely improve efficiency in farming. I'm actually unaware of the government's push for kids to move back into the rural areas to do farming. It's hard for me to understand where it's all going. I think one of the challenges China has is to rebuild trust with investors, right? I have friends whose businesses were shut down because of the education prohibition, P2P, all kinds of issues. So when people have put in billions of dollars and suddenly it's worth 0 because of a government decision, trust is broken, right? That's why there's no money going to China right now, right? So how that gets fixed in the next 5-10 years, I think it's important to China. I don't know what kids going to the rural areas to farm has to do with this, but I suspect there's not a lot of jobs in cities now, right? So it could be just to keep people employed. I don't know.
So you're not really too worried about a recession coming to Southeast Asia in the next couple of years? Or do you think that's a real serious concern?
It's a concern, but it's not a high probability scenario.
Okay.
Because it'll take quite severe recessions around the world for it to start affecting Southeast Asia. You can have a little one here, a little one in Europe.
Yeah. Okay. So I think that may be a good place to stop for our session today. Peng, this was really enlightening. We really appreciate the view from the front lines. And, please join me in thanking our speaker.
Thank you.